Hey everyone, welcome back to Corporate Decoder, the place where we unravel SEC filings so you don't have to. Today we're diving into Aether Holdings Incorporated's latest annual report, and let's just say their finances are as interesting as a Bitcoin price chart after a tweet. Stick around, because we're about to decode what is really going on under the hood. And hey, if you appreciate getting straight insights from these massive corporate documents, make sure you are subscribed. We also have a growing Discord community linked in the description below where we break down more of these filings. Alright, let's jump right into it. Aether Holdings Inc., known by its ticker Aether, is operating in the fintech space, aiming to provide research analytics and tools for traders through their platform sentimentrader.com. They're also dipping their toes into the world of cryptocurrency, planning to make Bitcoin a major part of their treasury strategy. Now, let's talk numbers. The financial tables here are where the real story unfolds. For the year ending the 30th of September 2025, Aether Holdings brought in $1,380,850 in revenue. That is actually a slight dip of about 4.1% compared to the previous year. Not a huge drop, but in a growing market, you generally want to see that arrow pointing up. Their cost of sales, which includes things like hosting and analyst salaries directly tied to generating those reports, came in at $403,381. This was also down from the prior year by about 9.5%, which is a good sign that they're managing those direct costs. What is really interesting is their gross profit margin. It actually improved nicely to about 70.8% from around 69.1% the year before. So even though their total revenue was down a little, they became more efficient at generating that profit from each dollar of revenue, which is a positive sign. But here is where things get a bit more telling. Look at their sales and marketing expenses. They skyrocketed by over 324%, jumping from $130,443 to a whopping $553,385. This means they spent a lot more money trying to bring in customers this year compared to last. It is a huge jump, representing over 40% of their total revenue. This suggests a big push to acquire users, which is crucial for a company trying to grow. And the spending didn't stop there. General and administrative expenses, which cover everything from salaries and legal fees to office expenses, absolutely exploded. They went up by nearly 120% from $1,653,623 to $3,623,915. A massive chunk of this increase, over 90%, was due to rising legal and professional fees, likely tied to their initial public offering or IPO executive, and director compensation also saw a big jump, more than doubling. All this increased spending combined with that slight dip in revenue has led to a much larger loss before income taxes. This year, the loss was $3,136,013, compared to a loss of $939,436 in the previous year. That is more than a 230% increase in their loss. And that translates directly to their net loss, which ballooned to $3,141,311 for the year. It's important to remember that this is a company that is still in its growth phase, so losses aren't always a death knell, but the scale of this increase demands attention. Now, let's look at the cash situation. Thankfully, a big chunk of that increased spending and growing loss was fueled by their IPO. Their cash position at the end of the year was a much healthier $4,418,169, a big jump from just $557,823 the previous year. This IPO money is what is keeping them afloat and funding this aggressive expansion. However, their cash used in operating activities also surged. It went from $688,661 last year to a massive $3,570,318 this year. This just reinforces that their core business operations are currently costing more than they're bringing in, and they're burning through cash pretty quickly, even with that IPO money. The financing activities tell the IPO story. They saw over $7.6 million in cash provided by financing activities, largely thanks to the IPO proceeds. This influx of cash from investors is critical for a company like Aether that is investing heavily in growth. A quick note on their shares, you'll see some numbers adjusted for a 1.2 for -1 reverse stock split that happened. This is a common move companies make to increase their share price and sometimes to meet exchange listing requirements. Now, let's talk about the risks. And Aether has quite a few listed. They're upfront about having incurred losses and generating relatively small revenues to date. They anticipate continued losses for the foreseeable future as they try to ramp up revenue. This is a classic early stage company risk. They also explicitly state they will need to raise more capital. This means you as an investor could see your ownership get diluted in the future, or they might take on debt, which adds another layer of risk. It is a double-edged sword with early-stage companies. A huge part of their strategy relies on getting users to upgrade from free to paid subscriptions. They mention that the majority of their current users are on free subscriptions. If they can't convert them, that revenue growth they're banking on will be much harder to achieve. This is a massive dependency. They're heavily leaning into artificial intelligence, which is a smart move for a tech company, but it also comes with its own set of headaches. Operational issues, legal trouble, damage to their reputation, and privacy concerns are all on the table as AI gets more integrated into their business. Plus, the regulations around AI are still being written, which adds a layer of uncertainty. And then there is the drama. They're currently in a dispute with a former director over alleged promises of CEO position and stock. While the company denies these claims, legal battles are expensive, can distract management, and if they lose, it could really hurt their reputation and dilute shareholder value. Then there is the Bitcoin elephant in the room. They plan to hold a significant amount of their treasury in Bitcoin. They acknowledge its high volatility and that it doesn't pay interest or dividends. They are exposed to risks from custodians, potential regulatory clampdowns, and the general uncertainty surrounding digital assets. This is a bold strategy, and if Bitcoin prices take a nosedive, it will directly hit Aether's financial health. A big red flag here. They're operating in a way that might require them to register as an investment advisor, but they haven't. They're relying on a publisher's exclusion to avoid this, but if regulators disagree, it could mean huge fines and a forced change in how they do business, potentially impacting their ability to offer services. Now, for the auditor's report, ZH LLC has given their opinion that the financial statements present fairly, in all material respects, the company's financial position. However, they note that the company isn't required to have an audit of its internal controls over financial reporting yet. This is pretty standard for newer public companies, but it is something to keep an eye on as they grow. Looking at the numbers for the 30th of September 2024, their revenue was $1,440,096. This is the prior year number we compared against earlier. Their net loss for that prior year was $939,436. So you can see, even though they were losing money last year, the loss has significantly increased this year. That expansion spending we talked about really took its toll. On their balance sheet, the most striking change is their cash. It jumped from about $557,000 in 2024 to over $4.4 million in 2025, directly thanks to that IPO. Their total assets also saw a big jump. On the equity side, additional paid-in capital saw a massive increase, going from about $2.1 million to over $9.7 million. This is where the money from selling stock, like in their IPO, gets recorded. Their accumulated deficit also grew substantially, reflecting all the losses the company has incurred since its beginning, reaching over $5.1 million this year. This is common for companies investing heavily in growth. The cash flow statement really highlights that burn rate. They used over $3.5 million in cash from operating activities in 2025, compared to less than $700,000 the year before. The investing activities show they spent over $250,000 on property and intangible assets, preparing for future growth. In the notes, they explain that they operate in one segment, online subscription services. This means all their different products and newsletters are viewed as part of one big business unit. Their contract liabilities, which are payments received for services not yet delivered, have gone down slightly. This generally indicates they are fulfilling those service obligations and recognizing that revenue. And as we saw in the main statements, the general and administrative column here shows that huge jump in legal and professional fees, more than doubling year over year. Looking at the accounting policies, they've adopted new rules around accounting for crypto assets. This means their Bitcoin holdings, once they acquire them, will be valued at fair value, and any gains or losses will be reported in their income statement, which could lead to a lot of volatility in their reported earnings. The company's revenue is generated from providing online subscription services. They're also focused on the user journey, trying to convert those free users into paying ones, which is absolutely critical for their future success. And finally, that warrant activity shows they issued some warrants related to their IPO, which is pretty standard. So what is the story here? Aether Holdings Inc. is in a high-risk, high-reward situation. They're aggressively investing in expanding their platform using AI and diversifying into crypto. The IPO provided a much-needed cash infusion to fund this growth. However, their operating losses are widening significantly. They're heavily reliant on converting free users to paid ones. And the Bitcoin strategy, while potentially lucrative, brings a whole new level of risk and regulatory uncertainty. The dispute with the former director and the potential unregistered investment advisor status are also significant red flags that investors need to monitor closely. This company is essentially making a big bet on rapid growth and hoping their aggressive strategy pays off in the long run. It's a gamble, and for now, the numbers show they're burning cash much faster than before, even with the IPO funds. Alright, that is our breakdown of Aether Holdings Inc. Its latest filing. What is your take on their aggressive growth strategy and Bitcoin bet? Are you excited about their potential or worried about the ballooning losses? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate filings. And don't forget to join our Discord community, linked in the description for even more insights. Thanks for watching, and see you next time on Corporate Decoder.